Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for your daily cryptocurrency market update video. Every single day, if you guys are new around here, we release a video at 1 p.m. UK time, where we don't just look at the cryptocurrency markets, but we look at the crypto market relative to the macro environment and, of course, other markets. You guys know that I believe that investing is a game of liquidity, and we try and find that liquidity. It's how we got long at the start of the year, and ultimately why we stayed out of the markets in 2022 and mitigated a lot of that damage. So in this video, we have a lot of interesting things to go over. We're going to be looking at yesterday's events in regards to the Chicago PMI. We're going to tell you what the PMI is, why it's relevant, and what it potentially is highlighting. We're also going to look at what the market via the FedWatch CME tool is expecting to happen in the next rate meeting. Now, you guys know that we think rates have been the main driver of the markets because they have a bearing on liquidity over, really the past 40 years, but certainly it's been very relevant. As we've seen a tightening cycle come in, we've seen the markets adjust for that. And we do think rate hikes are over and ultimately are expecting a period of sideways rates, which we've looked at the context of sideways rates in regards to the S&P. And actually, the S&P does pretty well under this set of circumstances. So despite all the doom and gloom narrative, we are long the market. We're going to be showing you that in this video. There has been an adjustment. The markets via the FedWatch tool are now expecting no hike. And we think this is going to give markets a green light to run. You've got gold, Bitcoin, silver, all at key resistance levels. You've got the NASDAQ, which actually broke through its key resistance level, but there's similar DNA across the board with these markets. And to me, there is structure with all of them that is predicting upside. So we will cover all of that. We're also going to be looking at some Eurozone inflation. Ultimately, we don't think the Fed is going to do more hikes because we're seeing a weakening economy. We see that certainly with the Chicago PMI yesterday, which is relevant. We're also going to have non-farm payroll on Friday, which is going to be very interesting and telling for the jobs market, which is really what Jerome Powell has used to push him to do more rate hikes. He said we've got a strong labor market, so we can continue to do this, and we're not really seeing any cracks. The combination of lower inflation, which is the main mandate for the Federal Reserve to stabilize that with rate hikes, i.e. kill demand to bring it in line with supply, and a weakening or a slowing down job market, I don't think the Fed would be wise to tighten into that. Certainly as rates are in restrictive territory, and we actually think that inflation has come right down to sort of roundabout where true inflation has it at 2.9%, not where the CPI has it at 4.9%. And of course, we do have another CPI print before all the data comes in. So we will be talking about all that. We're also going to be talking about how the head of an equity strategy is now calling out the central banks for their pumpermentals. Guys, I want you all to break free from the system. Now, I'm not calling it the Matrix or anything like that. The financial system that has kept us in a financial slavery. I have personally done it through investing in the cryptocurrency market, and I believe you guys can do it too. So before I jump into everything, guys, if you want to smash that like button, if you're not already subscribed, please do so. Let's get into the video. So we have Bitcoin, of course, that rejects off its 30K. This is what we looked at as a key resistance level. It's very obvious that 30K was going to be resistance. People calling this as a good call. It's an obvious call, guys. Everyone was looking at it. We've rejected off it. We are now building up momentum. We have likened the 30K level to a high jumper or a hurdle jumper jumping a hurdle. You don't jump stationary from the hurdle. Typically, you take a run up or a few steps back, and that's what Bitcoin's doing. We've got this inverse head and shoulders that is not just relevant on the Bitcoin chart. We also had it on the NASDAQ chart. So we did expect resistance here, but we ultimately said, this was something we were looking at yesterday, very obvious that the NASDAQ was going to have a bit of a pause where it did yesterday. We've got this, we broke out of this descending grind line. You ultimately came back to retest it. There is still the possibility Bitcoin revisits 25K neckline and then sees upside. But ultimately, I wouldn't bet on it. Just like we said we wouldn't bet, even though we thought you were going to have a bit more resistance here than you did, we wouldn't take the short there, even though from a basic trading level, support and resistance does play out. It plays out consistently. The NASDAQ has gone on to smash that. You can see this inverse head and shoulders here. You can see also you do have it with the S&P, which broke through. We do have higher targets. We actually could see the S&P going on despite everything and putting in a new all-time high. That head and shoulders target would indicate it, whether you take it from a log or a non-log target. And also, we do actually historically see the S&P do very well under sideways rates, which we think is upon us. We're going to talk about it all, guys. Subscribe to this channel, and if you can afford the Patreon, the peace of mind you will get in the Patreon is second to none. I have not found for the value anything that comes close in regards to the weekly meetings that we do, where we look at everything. We went long an altcoin this morning. If you guys want to find out more about that, click the link in the description and go and check out the Patreon. Start of the month's a great time to join. If it's not for you, you can cancel your membership after one month. We don't tie anybody into contracts. So the S&P's doing this. We've also looked at this and we've said to people, how have the bears done this year? Go and check my Twitter. If you join the Patreon, you'll see the video that we did on the 5th of January where we said, look, we're going to start buying crypto again here. And we were looking at buying crypto in 2023 before it had even happened after getting out the market. How's this looking for the bears? How have the bears done this year? And you are 6 months into the year now and still bearish. If you're bearish for long enough, you'll eventually be right. But what we try and do on this channel and what we try and do as a group and help you guys do is pick the big moves. We're not necessarily interested from an investment point of view in getting in, getting out, getting in, getting out. We just want to get on the right side of the trend. That's all I care about. From an investment side of you. Trading side of you is slightly different. We have method and strategy for that. But ultimately, and really from the trading point of view, you know, I'm still very much, I don't think your journey as a trader ever stops. You're constantly learning. It is a development program. The traders amongst you will know that. You get to know yourself very well as a trader. And I'm still, I would say, early on that journey. But we certainly do try and trade when we see reason to do so. So ultimately, you know, how's your bear market going, guys? Can you see this sort of head and shoulders that we have? It looks very similar to where the Nasdaq's at, right? Can you see this? And these stocks are maybe leading the way. Coinbase had a shit day yesterday. However, I do think Coinbase is going to do bloody well, by the way. I think Coinbase is going to be an absolute giant, and actually will be looking to buy some Coinbase stock myself. Quite a few people in the group already have some Coinbase stock. We've got gold, which we think is going to see new all-time highs soon. And the thing is with price discovery is it can be very explosive. You've got all these resistance levels coming into play. You got the dollar, which has found support. We do ultimately think it will flip that. Whether it's topped out now or takes a little bit of time, we'll see. But rates are rates really caused this bull market. And now rates coming to an end. Frank ran it. Dollar is, if you get the dollar trade right, you'll usually get the other side of the trade right. We do think this is coming to sideways point of view. And we have covered, go and look at Fed funds going sideways and overlay the S&P and see what happens. It's typically a good period. I did, and I'll be making a video for you guys about ETFs and what the effects of that's going to be for Bitcoin. So stay tuned for that. And of course, we've used the 2-year yields to kind of give us this, you know, as our leading indicator for the Fed funds. So gold's a sort of high. This was from the Market Sniper. For those of you that aren't familiar with Francis Hunt, we've had him on the channel plenty of times. I think he's one of the greatest minds when it comes to the markets. He's looking at a potential inverse head and shoulders. Similar DNA across the board here with the markets. And honestly, go and give Francis a follow, by the way, guys, at the Market Sniper, the Crypto Sniper, and the Reset Sniper. He puts out some great things on the Reset Sniper where he talks about, you know, more conspiratorial side of things. But I think these markets are ready to rock and roll. And that's despite everything going on. So yesterday was quite a down day for the markets, certainly the S&P and others. Today, the futures market is maybe hinting that it wants to see a little bit of upside. Gold's doing quite well. Dollar's doing down. So that does kind of put the footing for a green day for the markets, even though Bitcoin's currently down today. Again, we did long a certain altcoin this morning. We'll see how that plays out. Yesterday, you had the Chicago PMI. Now, what the hell? Why should you care? Now, I'm not a macroeconomist. I never intended to become one. I'm a crypto-specific guy that had to get on board with a macro. And actually, one thing you guys will find while watching me is we've got a very good sense of it. Lots of people yesterday talking about the debt ceiling and how it's, you know, if we look at 2019 and what happened there with the repo market, the same thing's going to happen again and the Fed's going to drain liquidity. They failed to understand that the repo market has $2.4 trillion in it today, and in 2019 had, you know, under 100 billion, sorry. But the Chicago PMI stands for the Chicago Purchasing Managers Index, okay? Now, when the PMI is below 50, it indicates a contracting market. So when it's below 50, it indicates that things aren't looking too good. Yesterday, the expectations for the Chicago PMI were 4.7. It came in at 40, and you can see where that is. Typically, the A month recession starts is round about your 40 mark when you go below it. And ultimately, you don't really want to drop below 40. Ultimately, you're very close to it. We have seen a stab below it previously. However, we'll see. It's a very volatile market and you're going to get volatile swings here. So this is what caused the markets to sell off yesterday. On Friday, so not today, we've got a number of interesting data. There's lots of Euro data. We can talk about Euro CPI, and maybe that's some sort of a forecast of what's to come for the CPI in the US. On Friday, you've got non-farm payroll. Okay? So non-farm payroll is what Jerome Powell has used to weigh out the economy. Now, one reason we don't think the Fed's going to continue to up rates, we think they'd be stupid to do so, is because you have a slowing down of jobs added to the economy. With the backdrop of lower inflation, if you don't take the true inflation stats, just look at their own inflationary stats, which has it at 4.9. I don't think that the Fed should, and they might, up rates in regards to this. And actually, we've very much backed no more hike. The markets have gone against us up until recently. It's gone probability of a hike, now probability of not a hike. We don't think they're going to do another hike until we see that 2-year yields go higher. 2-year yields is currently predicting it's at 4.43, so nearly a whole point in terms of cuts. This leads the Fed funds. It led it to the upside. It will lead it to the downside. You can see that's certainly historically true. We've looked at what happens with the markets under sideways rates. Ultimately, we don't think the Fed's going to do another hike, but we'll see. If you get a lower than expected non-farm, and remember you've had lower than expected CPIs, have I got anything else in here? There was you're seeing deflation across the board. This is Eurozone flash CPI year on year for May. Headline is at 6.1 versus 6.3 expected, so lower than expected CPI. The prior one was 7. It's shown a significant drop there. Core also coming down, but a little bit more sticky. Core's always typically more sticky. And then here we go. So we think actually what the Fed's doing is working. I'm not even sure the Fed should have upped rates in the first place, to be honest. I think inflation would have come down on its own. Maybe not, of course, not to the same degree, but eventually it would have. Are they doing more damage to the individual through higher rate hikes? Well, we've seen record mortgage, or not record mortgage. We've seen a lot of mortgages, people defaulting on them, housing markets getting smashed, seeing lots of things take place. So there's a hell of a lot going on. We make sense of it all. We ultimately think that you're going to have a good time under sideways rates. I think the market looks set for more upside. Technically, we think that. Fundamentally, we think that, although the technicals is what drives us. And ultimately, we position that way. My money's where my mouth is, well and truly, in regards to being long the cryptocurrency market. We, as a channel called All in Crypto, last year was kind of funny because we weren't really in crypto. We had majority dollar stable coins. But now we are becoming all in crypto once again. And hopefully you guys are on that journey with me. What you guys decide to do with your money is entirely your choice. Nothing I say or do here is financial advice. This is all just purely my opinion. And you guys in the comment section can question that. You can disagree with it and leave your reasons why, because ultimately I think a discussion is very healthy. And if there's a reason that you guys see to be and expect downside, ultimately we've got the yield curve that is predicting a crash. We don't think that plays out until later on down the line. And that's actually fundamentally where we disagree with the bears and the bulls. If you're bearish for long enough, you'll be right eventually. If you're bullish for long enough, you'll be right eventually. We try and mitigate that and switch between when we see reason to do so. Ultimately, we're bullish right now, but we do think that a crash is coming down the line. But it could be 12, 24, who knows how many months down the line. And what do you do in the meantime? That's what we said at the start of the year. We said, okay, things look bad and we know the yield curve is predicting something, but are you just going to sit on the sidelines in fear? And what happens when the market starts flipping some of these levels? Certainly Bitcoin's 30K. The NASDAQ continues to accelerate. So does the S&P. What happens when gold reaches new all-time highs? You're going to get people rushing into the market, certainly on the backdrop of maybe a dollar selling off, which is going to be rate related. So there's lots of interesting things going on. The last thing I want to love and leave you guys with is a tweet from Lynn Alden, the head of equity strategies at a $90 billion AUM asset manager taking no prisoners on Twitter today. Let's look at this tweet. And why am I showing you this? Because I want everybody to break free of the financial slavery that you are a part of, that has been induced by the central banks. Investing has changed my life, and it will do the same thing for you guys, ladies and gentlemen. So investor home price purchases is 49% down year on year. What kind of society are we living in here where this chart shoots higher, then shoots lower, then shoots higher, then shoots lower in a non-stop cycle of clown world boom and bust? Time to defenestrate these central banks. This is ridiculous. Amen, brother. The central banks have brought in a financial slavery. I do not think the government should be involved in. I think the government, we should have a lot smaller government control than we do. The government, you have become completely dependent on the government. Completely. In everything you do. Your food sources, your schooling, your, certainly in the UK, medical, your housing, so many ways the government is basically in control, and it should never have been allowed to get like that. And they have basically been allowed to do what they want as a result of it. And the central bank is the great manipulator of markets. These boom and busts will go hand in hand with what the central banks are doing. It's crazy, guys. And they are always on the right side of these boom and busts, and so are their pals. And retail that doesn't take an interest in this kind of stuff, which is why financial education is so damn important, gets thrown around. We're on a crusade on this channel to make sure you guys get educated as best as I possibly can. I'm not always right about everything, and I'm not the best mind out there in regards to this stuff. We've mentioned Francis, who I think is a brilliant guy to follow. There's a number of others out there. You need to get financially savvy because it will change your life, and it will help you get on the right side of these boom and bust cycles. On that note, guys, I'm going to love and leave you. If you have enjoyed this content, as always, a like is appreciated. So is a comment. We'll see you all in the next YouTube video. And yeah, have a fantastic Thursday. Catch you all in the next one.